All right, guys, hyperinflation's here. And in this video, I want to share with you my game plan, how to grow my wealth during this time frame and not lose money due to hyperinflation. So what I want to start with is I want to read this clip about what hyperinflation is and then move into my game plan. So um, there are two primary causes of hyperinflation, and one, an increase in money supply not supported by economic growth, which increases inflation, and two, a demand pull inflation in which demand outstrips supply. These two causes are clearly linked since both overload the demand side of the supply demand equation. Okay. The increase in money supply is typically caused by government action, such as what happened in Germany in 1923. When the government injects money into the economy, hyperinflation can result. The demand pull inflationary effect can often happens primarily because people have more money, creating a willingness to pay higher prices, which increases demand. Which obviously, to me, the first thing it sounds like is real estate and how real estate prices are just going through the roof, and people are paying 100K over asking price and not even getting accepted offers, which is just insane to me. Another article is saying hyperinflation is here. What I want to point out is the charts. The charts all look the same. I'm not going to read anything here, but you can see the national home price index, boom, up. European Union up. S&P 500 up. Just constantly going. Everything is kind of going up, and this constant trend, even gold, which for me, gold is kind of a lame investment. Don't hate me for that, but I think gold is a lame investment. There's no cash flow, and it just stores cash. It's literally a hedge. Real estate produces cash flow and tax benefits. So, like for me, like gold is lame, but when you see gold prices going up, there's Bitcoin. Doge this morning is like at 55 cents. It's ridiculous. And so everything's kind of going up like crazy right now. So what I want to do is I want to talk about my game plan. As you can see in here, my net worth is $1.82 million. Inflation alone will push me over $2 million. I have no doubt about that. And if I look just right at my houses, the pricing of my houses, I mean, if I rewind 1 month, the price of this house has gone up a decent amount. If I go back one more month, 2 months time frame, it's gone up $140,000. Now, obviously, that's not a perfect science. These are, estimations. For example, I'm just getting a refinance on this house right here, and I'm getting cash out because this isn't doing me any good. And I just had the appraisal come in right around this value. So like the values are close enough. So between me having a high income, between me having excess cash coming from a refinance, I'm trying to pull as much cash out as possible in all the different places so I can run with my game plan. So here's what my game plan looks like. First, if I have any excess cash, all of it goes into the stock market. I don't have a lot of cash in my bank account. Now I'm doing a home project right now, and you can see here this is all up to date stuff. So it's showing that I have 100 grand in my bank account, 2.8% of my net worth in my bank account. And so, I'm doing a huge project right now, and I'm planning over the next 3 to 5 weeks to spend about 80 grand. Okay. I'm creating a little bit more value, another unit at my house, and I'm planning on I'm using the cash. Now, I think that's the high estimate is the 80 grand. It could be as low as 50. Okay. Anything extra beyond my project, and I have some cash, some commissions coming in from one of my income sources, and I'm planning on putting everything into the stock market. My M1 finance account, which shows up my equity, which keeps going down because we keep, my tech stocks keep getting worked. you know, I keep plowing into those because eventually those will go up and they'll skyrocket. So Robinhood, M1 Finance, everything's going in. So that's step one, is any excess cash. Okay. And as soon as I'm done with this project, probably the most I'll try to keep here is like 20 grand, because I can always pull the money from all these other pieces. So right now I'm just going to dump everything into equities. Okay. The second step, I've already taken the liberties, and I hope there's no problems with this in the future. Um, I have 3 properties under contract, 1 in Texas and 2 here in Utah, where I live, and they each have 2 units. So I'm getting 6 more units out of these 3 purchases. And you know, I'm watching the great Ken McElroy on YouTube, and yesterday he's talking about how he believes rents are going to surge because of hyperinflation. And so what am I doing? I'm trying to, one, acquire as much debt as possible. You know, right now it's showing me that, well, let's take a look here. If I look at my manual liabilities here, it's showing, let's see here. No, it's showing I have 1 mortgage, $500,000. And I got another one, $400,000, another one, $300,000. Okay. And, oh, and here's another one. So I have 4 mortgages. I have a 5th one coming. I'm trying to acquire as much debt as possible as part of this, because I believe inflation is going to erode the real estate debt that I have. And at the same time, values are going to skyrocket. At the same time, rental rates are going to skyrocket. And so right now I'm doing a little transition in 2 of my units right now. And, you know, between home 2, 3, and 4, I'm $2,000 a month under rented. Prices have just gone up. And so 2 of the 5 units here, I'm raising rents. I'm getting about another $700 a month. And when the other tenants leave, I'll raise and get another $1,300 a month. Well, I'm going to be adding 6 more units, and they'll be decent cash flow, but they'll be amazing cash flow in 2 to 3 years. So that's step number 2, is buy as much property as you can. Now, of course, I'm not giving advice. I'm just telling you what I'm doing, which is I'm buying 3 more properties. Okay. And then when buying time is done, you know, right now it's May, and most of these properties are, you know, one's in November and 2 in December. Okay. So by the end of the year, I'm looking really good. Now I got 3 more properties here on the list, and then I'm going back to, if we go to my balance sheet here, I'm going back to this place where cash is getting converted back into equities. Now, what am I going to buy? The first thing that I'm going to buy is I love this stock. I love this fund. Okay. And I'm going to, it's at 11% dividend. I feel like it's very, very stable, and it doesn't have a lot of growth. You can see it actually has a negative growth over 5 years. You can see the down point here, but I'm not in for growth. If I can get a solid 11% year, and they have been paying that for years, if I can get 11%, 11.6 in this case, you know, if you have 100,000 in that, that's $1,000 a month cash flow. That's incredible. $1,000 a month automatically buys more stock, more Apple, more Tesla, more of my other favorite stocks. The other fund that I'm buying is JEPI, which is you know, JP Morgan's, you know, income ETF. And you know, they're a newer fund, and so they're not showing a dividend yield, and it changes month to month, but they still have returned to 20%. You know, one year, I think they've been in business for about 1 year, and that's incredible growth. And so for me, if I compile, my hope is to, you know, have $100,000 of each of these. I love AT&T stock. I got a $550 dividend, quarterly dividend today, $550. I immediately put that back into the market, and I dumped that into both of these stocks, because my goal is 100K QYLD, 100K JEPI, 100K AT&T, And then I'm going to go heavy into just my other dividend stocks, Johnson and Johnson, and 3M, companies like that have decades of history of dividends. And for me, if I can dump $500,000 into this, that's $5,000 a month in income between these three stocks, and then I can go a little bit more, a little more broad. So anyway, that's my plan. I have 6 months before I'm closing on these real estate properties. Excellent. I'm going to put everything into these stocks, because if in the meantime, if I can get from my refinance $350,000, my excess cash, which is coming probably another $100,000, and I dump it all into, let's just say JEPI or even QYLD right now, just all in that. I know that's kind of a ludicrous thought, but if I put it all in here, $400,000, that's $4,000 a month cash flow times 6 months. That's an extra 24 grand for free for basically renting out my cash. So that's my game plan. Excess cash, dump it into the market, and then buy 3 properties, and then go back to excess cash into the market. So I hope that's helpful. That's my game plan. I'm not happy or thrilled about hyperinflation, but it is what it is. And if you hold your cash, you're going to get screwed.